Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netease Cloud Music Inc. Annual Report. Netease Cloud Music Inc. offers a wide range of businesses and services to its users. At the core of its operations is the online music platform, Netease Cloud Music, which provides users with access to various music content. In addition to this, the company also offers ancillary products such as Look Live Streaming, Shengbo, and Yin Jai, which cater to the social entertainment needs of its users. The company's services extend beyond music streaming, with a focus on creating a comprehensive online experience for its users. This includes membership subscription options, sublicensing of content royalties, and online advertising services that allow businesses to reach their target audience. Furthermore, Netease Cloud Music Inc. also generates revenue through the sale of digital music albums and songs, as well as virtual items in social entertainment platforms. In summary, Netease Cloud Music Inc.'s business model is centered around providing a multifaceted online experience for its users, with a focus on music streaming, social entertainment, and ancillary services that cater to various needs. Netease Cloud Music Inc. maintains a market capitalization of $26 billion, broadly in line with the industry peer group. Netease Cloud Music Inc. trades at a lower price-to-earnings ratio of 9 times and a higher price-to-book ratio of 1.85 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of various factors. On one hand, steady year-over-year growth in active user base, increased subscription-based membership revenue, and improved gross margins have contributed significantly to revenue growth. Additionally, expanding content libraries through diversifying content mix and enhancing partnerships with copyright holders have also played a crucial role. Furthermore, amplifying offerings in signature music genres through partnering with other labels has led to an increase in online music services by 12%. Membership subscriptions have also seen a significant rise of 13.1%, contributing to the overall revenue growth. On the other hand, a dilution in monthly ARPPU due to changes in subscriber mix and a decline in social entertainment services and others have slightly offset these gains. Overall, the key drivers of revenue growth are primarily driven by increased subscription-based membership revenue, expanding content libraries, and enhancing partnerships with copyright holders. The net income of the company underwent a significant change over the 2-year period. Initially, it increased by 38.5% year-on-year, indicating a positive trend. However, this growth was surpassed when it rose by a substantial 75% from RM 565.4 million to RM 745.8 million. The profit margins also showed an improvement during the same period. The gross margin increased from 33.7% in 2024 to 35.7%, indicating a better control over costs and efficient operations. Unfortunately, the operating profit margin is not explicitly stated on page 14, making it difficult to assess its change. Nonetheless, the overall trend suggests that the company's financial performance has been improving, with significant growth in net income and an increase in gross margins. The company's financial performance indicates a consistent generation of positive operating cash flow. The data shows that in both 2025 and 2024, the net cash generated from operating activities was substantial. In 2025, it stood at Rm618,081, while in 2024, it reached Rm774,620. This trend suggests a stable financial position for the company, with sufficient funds being generated to support its operations and potentially invest in growth initiatives. The company's debt level has undergone some changes over the past year. The gearing ratio, which measures the proportion of long-term debt to total assets, decreased from 25% to 21.8%. This indicates a reduction in the company's reliance on debt financing. However, there was no significant change in non-current assets, specifically investments in subsidiaries. In terms of interest expenses, the company has seen a decrease. The interest expenses decreased from Rm139,000 to Rm194,000, indicating a reduction in the cost of servicing its debt. Additionally, the net interest paid can be inferred as a decrease due to an increase in interest received and no significant change in interest elements of lease payments. Overall, these changes suggest that the company has managed to reduce its debt burden and lower its interest expenses over the past year. Management's primary focus is on enhancing the music experience for users through various initiatives. This includes expanding high-quality content offerings, advancing product and feature innovation, and prioritizing personalized recommendations to improve user engagement. The company is also investing in refining its recommendation model and music genre classification system. In terms of strategy, management is committed to long-term sustainability by strengthening risk management capabilities and embedding environmental, social, and governance (ESG) principles into their overall approach. This commitment to ESG will help the company navigate potential risks and opportunities while maintaining a responsible business practice. The company's outlook appears optimistic due to improved cost control, increased government grants, and continued growth in deposit amounts driving finance income increases. Additionally, management is recognizing deferred tax assets, resulting in significant income tax credits. These factors contribute to a positive outlook for the company's future performance. The company has made significant moves through acquisitions, expanding its capabilities and offerings. Two notable acquisitions include information technology services and shared services from Netease Group. These strategic purchases are expected to enhance the company's operational efficiency and competitiveness in the market. These acquisitions demonstrate the company's commitment to growth and innovation as it seeks to leverage new technologies and expertise to drive business forward. By acquiring these services, the company is well positioned to capitalize on emerging trends and opportunities, ultimately driving long-term success. The company's financial activities have been multifaceted. One notable aspect is its dividend payment history. As per the provided information, the company has paid dividends on multiple occasions, as mentioned in pages 143 and 159 of the document. In addition to paying dividends, the company has also engaged in share buybacks. This strategic move indicates a focus on returning value to shareholders while also potentially influencing the company's stock price. That concludes the financial summary for Netease Cloud Music Inc. Feel free to comment below, and I will be happy to answer them when possible.